Breaking news. Government announced bold mortgage reform. What is that meaning to you? How it's going to impact to our daily home buyers? Let's chat. It's Bagga with the Bagga team from Royal LePage Magna. Hey, this mortgage changes, which is happening by the government of Canada, is impacting. What is the changes are? Let's unfold and unwind all the topics, how it's going to impact, what is going to be benefit, what is not going to be benefit onto those ones. So let's chat. So there's three changes happen, which is I heard about it. Number one, they increase the insured mortgage price cap. What does that mean? In the past, the price cap for insured mortgages was below $1 million. Now they changes to $1.5 million. What does that mean to you? Before, any home buyers was buying a property, they has to stay below $1 million to qualify with insured mortgage, which is a 5%, 10%, and 15% as you can insured mortgages. Now they change from $1 million to $1.5 million. So it means the buyers are in Vancouver, Toronto, where the high-end properties are much higher prices comparing to Edmonton. That's going to be a more benefit, so they can buy the properties. They can be in the home ownership trend. So that's going to be a benefit to them. That's a first change is going to impact. So that second change is going to happen that the first-time home buyers and new builds, they change the amortization. It was a 25 years amortization before. Now it's going to be 30 years. So it means new home buyers, which is the first time, they can increase their amortization from 25 years to 30 years. By doing that, their payments going to come down. That's a second change. And third one, no mortgage stress test. And that is on renewing insured mortgages with a different lender. So when you are renewing your mortgage, which is coming on a year, 2 year, 3 year, 5 years, which is in the past, now they are coming to renew, they don't need to go through the stress test, because if those mortgages are already insured, they can have it with any lender, so they don't need to do. So these are the big three changes happen in this changes. So now, let's chat about how it's going to impact to the new home buyers and at this moment. So number one, for example, in the past, this is $1 million. If you have it as below insured, you better pay 5% or 10%. Before, you used to pay $50,000 and $100,000, and after $1 million, you have to pay 20% because you cannot be qualified with insured mortgage. Now, that same thing, if you are up till $1.5 million, you can buy a property with only $75,000 to, let's say, if you want to pay 10%. Obviously, you have to pay $150,000, but you can still qualify that mortgage below $1.5 million. So they're giving you $500,000 more leeway where you can cover up and then get your mortgage. That's going to be another good benefit for all the new home buyers or the people who has a credit and they could not qualify, especially where the markets are much higher priced at this moment. And the second one, for example, let's say the new home buyers was in the past $50,000, you have a 25-year amortization, let's say interest rate is 4.5%, their mortgage payment was only $27.67 with the 25. Now, if the same home buyers can qualify and then get their mortgage for $500,000 over 30 years amortization, same 4.5% interest, your payment's going to drop $2,521. What does that mean to you? The same $500,000 by changing 25 years to 30 years, and then that's going to be your payment is going to drop down to $245 or $250. So another thing, third benefit, obviously, when you're renewing your mortgage, you're not going to go through a stress test. But so these are the benefits. What is the drawback? Obviously, if you changing your mortgage from 25 years to 30 years, obviously you have to pay 5 more year extra payments. But by doing this one, it's a choice. But sometimes it's benefit to get the mortgages, at least pay and stay in your own home rather than be renting. That's a drawback. But on the other side, hey, if you used to be, you don't have a down payment for 20%, now you have an option that you can buy property for even less than 5% or 10% down payment, which is you're not supposed to pay up till 20%. I think these are the biggest changes happen into the mortgage industry. I think it's going to be a benefit for all the home buyers eventually. I think those changes are due. It's not only applicable only for Edmonton or Alberta, it's also impacted to the all greater Canadian real estate market. I think it's going to be good changes. I think that especially for the first time home buyers or the new home built properties. But hey, I want to hear from you. What do you think that of those changes? Is that good changes or bad changes? Please comment below. We can definitely discuss about it. But if you are a brand new home buyers or you're in the market to buy a home in Edmonton or surrounding areas, Bagga team is dedicated to sit down with you and then consult and then let you know what is good for you, what you are good, not good for you. Call us today for own buyer consult. In-house, one of our buyer specialists will be sit down with you and go through with you, and then we can connect with you one of the amazing person who can be qualified to your mortgage side. Phone number you can reach to us 780-431-5615 or visit www.manibagga.com. Thank you so much. Hopefully this changes will be helpful for you. If you think that this video is important for your loved one, make sure go transfer this video to them, and also make sure comment below and let's chat. Thank you so much. Stay tuned. We will bring you our next breaking news as soon as it happens. Appreciate it. See you soon.